This is a classic stops move. People have been buying and buying and buying. They're all thinking, this falls back below 55, I want out of this. So what you can do is, one, you can capture that, sell through 55 and capture the people getting stopped out. But also, once you've had that flush out, look at the people at point one. Yes, it's annoying, it's come all the way back to a scratch. They're not in trouble. And so this is where you can then start to get the opportunity to start buying again. All right guys, what I want to do today is a little bit more detail on a trade, and particularly looking at market psychology and about the difference between the idea and the trade. Yeah, it's all very well and good and often quite easy to come up with a good idea and a good potential trade. But then the detail comes into how do you actually execute this? And there was a great example of this, a gold breakout play recently. And I see numerous traders trying to take this trade in different ways. You know, some trying to be in from the beginning, some trying to get in at different phases of the move. So what we're going to go and have a look at is then what exactly happens within a trade, and how do you then take the idea and understand whether the idea is still valid and how you can still go about playing this trade. This is a trade looking at gold. Now, this is pretty straightforward trade. This is a trade that, you know, I saw a few people taking this trade, and the reason I saw that is because I know that a lot of people love this type of trade. This is the kind of thing I look on a chart and I think I know the traders who are going to be on this one. It's the beauty of being on a trading floor, of seeing and knowing a large number of traders. No, to be fair, this is a trade I like myself. It's nicely structured. The idea of this is an hourly chart, so covering multiple days, in fact, a couple of weeks worth of trade here. What you're looking for is these sequences of highs. So this is then a chance for a straightforward breakout. You break the first high, which is 58.1, and then you break the next highs in sequence. So 60, 62.4, 64.3, looking for the final break target of the break of 70.5. That's the idea. And this is the whole point. There's a difference between an idea and the trade. How exactly do you play this trade? That's the bit that we're interested in. I'm going to show you a couple of little parts, and in particular, the bit where the trade for some people goes completely wrong, and then the final leg of the actual move. So that's what we're going to go and focus on here. So let's go and look at the breakdown of this, the specifics of where you could take this trade on. Now, one thing I just want people to note before we move away from this chart is these couple of highs just here that I've drawn the red line across. And the reason that I want you to note those is that's this little breakout here. This is the initial breakout at point one. So what I've tried to do here is illustrate the variety of different points and different areas that the market trades through on the way up. Now, for some of the traders, and again, I can tell the types of traders who are going to take this. For some of them, they're trying to play this from point one using a small break. Bearing in mind, we're a long way from the first breakout point. I've got each of the levels marked on the chart here from 58.1 and onwards. 60, 62.3, 64.4, and then 70.5. So we've got all of them marked on. But some traders try and play this here. The idea of this is a preemptive positioning trade. You're not right on the trade here, but you're giving yourself a chance to be in on the idea early, meaning that by the time you break that first level at 58.1, you're already going to be about 86 on side. This gives you the opportunity to add, and then add through the subsequent levels on the way up. So that's the first idea of an entry. The second entry opportunity is the pullback after the initial test of the first high. So what you get here then is an initial move up. That's the first little break. You get this surge higher, then the market pulls back. This is then a move back towards 55. Now 55 is not a level. These are the kind of things, and this is the difference between an idea and a trade. Planning to buy 55 was not part of the idea, but when the market comes back and holds 55, that becomes the opportunity. You can play the bottom of this little pullback where the support comes in and try and play this for the break. That's what you get. Point three, you get the breakout. You get this momentum type of move. This is what now starts to bring people into the trade. So you've got to also think about the market psychology. As a trader, wherever you've got into this, the market psychology now at point three is this is on its way. And if you're not already in, you need to be getting in. You've broken 58.1. We're now knocking out 60, and you're looking up towards 62.4 as your next area. So this is the beginning of the move. If you want to be on the break of 70.5, you've got to be thinking you need to be in now. This is what draws people in. So people are now chasing the market up. It accelerates, it picks up some pace, and then we stall. This is the worst thing when you're in a trade like this, even if you're in from point one, because you're looking at this thinking, I'm not wrong. This still needs to go. We're not at target. You know, this is trading around 62, 63. So you've still got 80, 70, 80 ticks to go before you reach the high, before you reach that big target. So we're a long way from target. So this is not really a point that you can take your profit. But what you've got to think is then, where have people got into the trade? This is what's so important about market psychology. If you're in from point one, you're not panicking here. You're not too worried. If you're in from point two, this is annoying, but you're thinking, yeah, this is going to form a nice little flag and we're going to break up and on our way up there. And if you're in at point three, you're thinking this really needs to go. You're starting to get quite nervous, along with all the other people who've been buying at point three, or even worse, buying in here, assuming that flag idea and continuation. So you're now building up the number of people who were late to the party and now really want this to go. They're not going to weather much pullback on this. So what you then start to get is, as we start ticking back, people progressively exiting the trade, dependent upon where they got in. The late entrants are the people who start to run from the exit quickly. The further you come down, the more pressure the earlier entrants start to get put under. Once you get back below 58, this is where everybody starts to question whether the move is really going to happen. And this is where you then start to get this washout. So at point four, what you will also get, and this perpetuates the drop, at point four, this is the move back to the first breakout point of 58.1. People will start buying here. These additional buyers, if this doesn't bounce, are also going to be in trouble, which is what results in this move down here. So what I'll do is I'll show you what exactly happens at this point. So this is the point where we've broken back through 58. And what then starts to happen from this point is, well, quite simply, traders are now in trouble. So we're holding below 58. Now, one approach to this, knowing that 55 were the lows of that pullback before the breakout, you can actually play this with a stop and use a stop entry to get in short, the expectation that people are going to get forced out. This is a classic stops move. People have been buying and buying and buying. They're all thinking, if this falls back below 55, I want out of this. So what you can do is, one, you can capture that, sell through 55 and capture the people getting stopped out. But also, once you've had that flush out, look at the people at point one. Yes, it's annoying. It's come all the way back to a scratch. They're not in trouble. And so this is where you can then start to get the opportunity to start buying again. As long as this flush out is nothing more than that. And as you see here, that quick move down is a classic flush of stops. So unless you start finding new selling, this could well be the low. At least from a scalp perspective, this is a chance to take an opportunistic bounce, catching out or sort of making the most of that quick rush down. It's essentially a mispricing. And that's what you've got to think. When a stop gets triggered, this is a mispricing, if nothing else, because all a stop is people selling when they don't really want to. They're forced sellers. So they're not new sellers. They're not genuine sellers who really want to be short. What they are is people who were long who are now being forced to sell, essentially, because if they don't, they're going to be taking a more significant loss. So as a scalp, this is just a quick bounce back. 55 is the point that initially broke down from. So 55 becomes a quick target on a scalp, which is what you see at this point. So you get this quick little break back up towards 55. You can scalp your profit there. But what you can also do is you can play this as the idea again. You've got a wonderful entry point. And what was really interesting about this, almost everybody got out. Everybody on our floor who was trading this, almost everybody got out, apart from the one trader who played this from the beginning and clearly was of the view that this is nothing more than a shakeout and he's staying in for it. He stayed in the trade, waited for it to rotate back up, and was then able to be on the next leg of the move. Now, the next leg of the move, what you've got to think about here from a psychology perspective, if you got washed out, the idea is still good. And this is a really important point to anybody who's ever got washed out of a trade. The idea is still good. Back above 58, you've now got a new level to break, which is that 64.3 level. Once that breaks, we're now on for the break of the high. So that's the next stage of the trade. Don't think that because it didn't work as soon as you got in or when you started to take the trade, that this is done and dusted. The trade is still there to be had. So make sure you're always thinking about that. Think of the idea and lean back on the idea. The idea is still good. The trade is still potentially there. So this is then the final part of this trade. So here we go. We're now starting to creep back up. Market's got back above 55. We've got through 0.5 of thinking, yeah, this is now the beginning of the next leg towards the upside. And we're approaching 0.6. So we're starting off around about this area, 62, around about 25, 62. What you're looking for is the break of 64. That was the previous high. So that's the bit that we're interested in. So your next play now at 0.6, this is an order flow momentum type trade. This is about being quick. The reason you've got to be quick, and this is something to always remember, if this level's obvious, which it is, it's the last resistance before 70.5. If this is obvious, everybody else, I say everybody else, a large number of other people are also going to want to be getting in on this trade. They're all going to be wanting to get in here. This is where your order flow skills really, really come into play. So we're moving up. You've got to be ready to go with the momentum. As it starts to tip towards the high, you've got to be ready to go straight for this. Don't hesitate on it. We've seen these highs already. So you can see that we're not backing away from the high. So we've had this push towards the high. We don't back off. That's one of the first things. You've got that 92 lot just above the high as well. That's the point that you want to try and hit. There we go. We jump super quick. That's the first bit of stop. This is people chasing and chasing and chasing in. You've got a quick pocket of volume at 66, and this just relentlessly moves up. This is why I say you have to be quick. Everyone's trying to get onto this trade now. Any flashback, don't worry and don't look at this as, oh no, it's all turning around on me. This is people taking a quick profit. Quick flashback, this is the opportunity. As long as it's holding above that initial pocket of volume around 25.66, we're all good. This is a chance to add on to the trade. You've still got 10, 15 ticks through the high to go, and who knows when it goes through the high. But at this point, this is record highs. So you don't know quite how far it's going to go through the high. So you can kind of, jiggle your offers around as to where exactly you think this might go. It's worth putting an offer above the high in case you jump through and quickly back. If you do that, you're out, at least for part of your position. Jumps through it, sticks up there. Don't hesitate at this point now. This is also the point where as you jump through, you can say to yourself, right, my objective was 70.5. The job is done. Yes, you'd love it if it kept going and going and going and going. And this is where people get in trouble playing a runner. You play a runner here, you're now thinking to yourself, it's come back 20 ticks, maybe I should have been out. And what happens is it never goes back to the highs. So you end up with a situation, those playing a runner sit there waiting and waiting and waiting and get forced out down here. If this is your trade, if this is your plan to 70.5, when you get there, any flick through the level is good game to get out of the trade. A good trade is a trade that you get exactly what you want out of. This you did. It took a journey to do it, but this is given a great way of explaining market psychology and the difference between the idea and a trade. You're going to understand more about how we go about things, how we plan trades, how we execute trades, how to better understand a price ladder, a profile, a footprint. Click on the link, come join a webinar, and we will explain all of that for you. I'll see you all very soon. Take care.